So, and I had your brother on yesterday. I was telling you. So if I mistakenly call you Jason because I was calling him JR yesterday, so it'll be even.
Well, well, you were paying him a compliment and you insulting me. So
Oh man,
mm-hmm.
you don't hear that, right?
Yep.
All right, so let's get into it. We're going to talk about a little bit about some current events that's happening in the market today. What you got for us today, JR?
Yeah, so last week or about the last 5 or 6 days, um, the market had crashed. And so let me kind of break down, well, what exactly does that mean when they say the market's crashing and everybody, understands, oh, the market's going through the roof. Yeah, it means that, stocks overall are going up. But when it crashes, what exactly are they talking about? And so what happens is, I think we kind of talked about this a little bit on a previous episode, but I want to revisit it. This is an analogy I'm using. When you go to the doctor and they take before you even see the doctor, they're going to take your blood pressure, your temperature, and they take your weight, right? And the reason that they do that, because that's like three um, health indicators that kind of tell the overall health of you. Like if your temperature is way too high, you got a fever, you probably have an infection. And so they can look at your weight, they can look at your blood pressure, and they can make assumptions about your overall health. So the same thing applies in the stock market. They have three main indicators. One is called the Dow Jones Industrial Average. And if you think of these indicators as like buckets, and so each bucket has a certain number of stocks in it. So the Dow has 30 stocks in it. But these 30 stocks out of thousands and thousands of stocks doesn't sound like a lot, but these are ginormous companies, right? So in these 30 in this bucket of 30 stocks, if one of them goes down a little or up a little, it can sway the whole stock market, right? So when they talk about the market has crashed or it's gone down significantly, they're usually referring to the Dow and what's happening with these 30 big stocks. Then you have another bucket called the NASDAQ, and that's got like 3,000 plus stocks in it. And then you have something called the S&P 500, and that has 500 stocks in it. So these are just three different buckets that people can look at to see how the overall market is doing, going up or down. And they use a point system. So today the market went down. Let me look here. The market went down 494 points, almost 500 points, which that's a big drop, right? But what does that really mean, right? Doesn't look good, but what does it really mean? So in the Dow with these 30 stocks, they created a point system and they kind of take all 30 of these stocks and average their performance out. And they use a point system to say if all of them are going up, it might go up 10 points or 20 or 100 or 500. And if overall, when they average it out, overall their performance is down for the day, then they'll say it's down. So the day is down almost 500 points. That's a big drop. All right. So people who aren't in the know would turn on the TV and they might say, see, that's why that see, Ross, that's why I ain't in that market, man, because you're gonna lose all your money, you're gonna do this, you're gonna do that, right? And those same people turn around and in the next sentence say, hey man, um, they're having a sale at Best Buy on the
Mm.
headphones or the speaker that you want. And so you're gonna rush to go to that sale. But when the stock market's having a sale, everybody thinks that the world is coming to an end. And so every time I've seen this happen, and I don't have a crystal ball and nothing is guaranteed, right? So what I'm saying is I'm not telling your listening audience, oh, this is guaranteed to happen ever. I'm just telling you what I've seen happen over and over again. And every time we see a massive crash like this, 500 points overall, the market's down. I've seen the next day or within the next few days, it kind of comes roaring back because people are buying these things on sale. Those people who understand are like, oh man, this is 5% sale, 3% sale, 20% sale. So I can go in and scoop these up and ride it on back up. If in fact it does that, not a guarantee, but I'm just talking about the history of what I've seen every time this has happened. So now we can look, your listening audience can look. Today is what, August 1st, right? And so we had, again, I'm looking at my phone here, a $494 point drop. And so today is Thursday, Friday. Let's see what happens over the next couple of days if it goes back up. Or it may go down some more, which might even be better for people who are looking for a sale, right? But at some point, typically, those stocks go on so much of a sale that the people who are in the know start piling in and buying thousands and thousands and thousands of shares because it's on a massive sale. So that happened today. So that's one thing that is very current. Does that kind of make sense?
It does. So that goes along with what I always hear people say, and I guess the same thing in real estate: buy low, sell high. Same
Yeah,
kind.
yeah. And also there are people, now this deals with trading, not investing, right? And you know this because you're one of our Flip That Stock members, but there are people when the market is crashing and it's going down, they can do something called shorting a stock, SHORTENING, shorting a stock. All that simply means is I want to make money as the stock goes down. Now, here's the problem when I share that with people. It does not make sense. Like we all understand buy low, sell high, right? And most of us understand, okay, say we you're in real estate and you bought a house at 300,000 and 10 years later, 5 years later, you sell it for 500,000. You bought low, you said we all get that. But here's where it differs in the from the stock market to housing. Suppose you got that house at 500,000 and you were rooting for it to go down to 300,000. Like nobody does that in real estate, right?
No.
But in the stock market, you can get a stock, say you got it at $50 a share, and all the shares are a slice of ownership in a company. And if you're using a certain technique, you want it to go down. You want it to go from 50 to 49 to 48. You really want it to go to zero. The more it goes down, the more money you make. Now, again, to a lot of your listening audience who are just hearing this for the first time, on the podcast, we don't have time to go into all the details. You just gotta just take my word for it. Just like you can make money when the stock goes up, you can make money when the stock goes down. You can also buy a stock after it's gone down and it's on sale. And so there's looks like there's a pretty big sale going on today. I hope it crashes some more tomorrow, because if it crashes some more tomorrow on Friday, then come Monday, I don't have a crystal ball. Let me put the disclaimer out there. I don't have a crystal, but you're probably going to see that market run up Monday or Tuesday. The likelihood is high, right? So now the question is, okay, well, why did this market go down like that? Right? What made all of a sudden everybody panic and all this? So I know years ago, you used to always hear about the Fed's going to make his announcement on interest rates. And now I know you being in the real estate guru, you're very in tune with those interest rates and what the Fed does and all that, right?
Yes,
I
yes.
had no idea what they were talking about. I was like, I wasn't paying no attention to that. But now, knowing what I know, I'm very in tune with it, because here's what it means. And it's just a very simple concept. And I use this analogy. And Aziz, you're shopping for a car, right?
Yeah.
And you're financing it. You're all excited. I'm your salesperson. You found the perfect car. And you know how they always do this. Well, let me go talk to the manager. Let's do the financing. And I come back in and I'm like, Aziz, Mr. Ross, I've got great news for you. You have been approved. And I slide the piece of paper over. Let me show you the terms. We got you approved at this rate. Hey, we got you your monthly payment that you want, which most people focus on first, which is a mistake. And then you look and it says 28% interest rate. Right? You see, you're already shaking your head like, whoa, nah, wait a minute. Nah. So when the Fed raises interest rates, people buy less stuff, right? Because they're like, that's too high. I don't want to pay that interest on that money. People borrow less money because the rate is high. And what the Fed is trying to do, who controls the inflation, is he's trying to get inflation down So how does he do that? You raise the interest rate, less people buy stuff. So when less people buy stuff, then people start lowering their price, right? They start lowering the price because less people are buying stuff. So they lower the price to draw people in. So once I started kind of understanding all this, it really is a simple concept. And if the Fed says we're going to lower the interest rates, boom, more people start buying. It stimulates the economy and stuff. So yesterday, the Fed kept the rate the same. Some people thought he was going to actually cut the rate, and he didn't. He kept it the same. So people are like, oh man, I thought he was going to cut the rate, da da da. And so panic starts, and boom, that affects the market. So when you understand that, we can take advantage of that, when you're in the know. But most of us don't understand all this. And these are really some simple concepts once you really just think about them. And so we miss out. So we just turn on the news and it'll say, you know, so if we got a choice between um, listening to the latest news on Diddy and what's going on with Diddy, or we're flipping through the stations and we see something about the stock market crashing, we go, oh, I'll go back to Diddy. What's going on with Diddy? What's going on with Diddy? Right?
Yeah, right.
Whatever that may be, versus, hey, if this thing is crashing, stuff is on sale, there's an opportunity. So this is why it's important to just kind of pay attention to these various things because there's always an opportunity out there somewhere, as you
All
know.
about yeah, for sure.
Yeah.
And it's funny how the industries cross like that, and people think, oh, real estate is separate, stock market separate. They all kind of go, like you said, hand in hand. Because it's like, so when our interest rate, and I guess it's for all businesses, when interest rates go high for real estate, again, people buy less. So that puts us in a
Mm-hmm.
holding properties longer. Um, and in my opinion, what they're doing with the interest rate is backfiring. It's not curbing inflation. People aren't lowering their prices. We
Yeah.
still have high prices now. We have high interest rate. So it's working in my opinion against what he's trying to accomplish.
Well, here's the other thing is that once he cuts those interest rates, if he does, and people can now afford, in this example, real estate to get the house, then it becomes a bidding war and they drive it back up anyway. They drive the prices back up anyway.
Yeah.
So it's a delicate balancing act, and uh, it's one of them tough things. Like, I don't know if I want to be in that situation where every 6 weeks or so, I'm messing with these interest rates and stuff. But what we can do is we can look at what's going on and we can use that to maneuver, and look for opportunities.
Yeah.
And there's always opportunity somewhere for sure.
Always. Your
Yeah.
eyes are open, like you said, and just those basic things about the markets, interest rates, what the market's does. Like you just said, it's gonna crash for a few days and it's gonna come up a few days. That's just the
Hmm.
usual trend. And if you kind of start noticing those things and you look for those things, then that's when the opportunity presents itself, good or bad.
Hmm. Yep. And also the other thing is too, is that when you know trends and cycles and stuff like that, it can help uh, stop you from panicking, right? So if you saw the market crashing and everything, and you understand that, man, there's a lot of stuff on sale, even though the value of your stocks and portfolio might go down, you might go in. Some people go in and buy some more because it's on sale and then ride it back up. So it allows you not to panic when these different things happen.
Yep.
So yeah.
And that depends on your understanding, and that's why, I mean, leading up to what you do and, what we're trying to do here is educate people.
Hmm.
So those simple things doesn't have to be that complicated. Just like in Flip That Stock, you make trading very easy, very simple.
Hmm.
Tell people, don't worry about all these charts and things. This is what we're focusing on. And, if you want to know all the different charts and dynamics, go somewhere else because that's not what I'm teaching. I
You
know you
know,
said it several
yeah,
times.
yeah. What's funny, man, is that in creating the flip that stock system that I created, um, I was talking to a group of people and I said I created over a 20-year period now. I've been doing this a while, and I finally came up with this system over the years that is very consistent in getting profits when you follow it. And so I was doing this uh, seminar in Atlanta, and I said it's 14 steps, and I asked the audience, how long do you think it takes to do these 14 steps. And I heard things range from like 4 hours to 2 hours. And that was the main answer. I said, well, would you believe me if I said it takes 15 minutes to do 14 steps? And everybody's like, oh, come on, come on, come on, right? So I'm like, no, you can do them in 15 minutes. And so, and Aziz, you've seen it. So, am I telling the truth? Let's
Absolutely.
just go. So, so then people have joined Flip That Stock to learn how to flip stocks. And I showed them the 14 steps, and I always say, follow these 14 steps to the T. Everything I'm teaching, just follow the steps, right? And then people don't follow the steps. And they're skipping steps or they're this or that. And so I always ask people, why are you not following the steps? And you won't believe how many times I've heard people say, it's just too simple. It's got to be more complicated than this.
Yeah.
And so I'm like, no, actually, it's not. Number one. And number two is, why would you want something to be more complicated? Isn't life complicated enough? Don't you have enough complication? Now you want to come in and make this all complicated? And for some reason, in their brain, it's just this. And I think what it is too, and this is another thing, is that um, I heard a speaker say this, and man, it hit home. He was talking about how when you really want to make significant money, you have to detach time from the money.
Mm.
So what does he mean by that? What he was saying was, we've been conditioned to go to school, get the grades, get a job, and then we get paid a salary or we get paid by the hour. And even if we get a salary, that still can be broken down to an hourly rate, right? So we're used to, hey man, how much you make? $30 an hour, $50 an hour, whatever. We're used to time, money, right? But when you're flipping stocks, if you go in and in 30 seconds you make $300, that's hard for our brain to compute, right? Like all I did was click some buttons and I look in the profit column in this example, and I said I made $300 in 30 seconds. That messes with your head, right? That's like, nah, that's where the people say it can't be this simple. Like some wait a minute, right? So I find that when that happens, they start going back and they start overthinking stuff and complicating stuff. And I'm like, no, just follow the steps
Yeah.
and keep practicing and watch what happens.
Yeah. And
So,
go ahead.
no, I was just going to say, I think, there's a lot of psychology when it comes to trading. There's a lot of psychology when it comes to business, when it comes to real estate. There's a lot of psychology that goes into all aspects of it. And I don't think people think about that up front when they get into something. They have to be taught it and taught how to handle it because we all come with these preconceived notions. I was just doing a training today, and there's a gentleman who recently joined, but he had traded before. He lost a lot of money.
Mm.
So we met at a conference. He came to my seminar, and he told me a story, and he said, I just need a system. I need a system, right? So he joined. He's been following the system, and he went live and 8 times. He went live 8 times. And out of those 8 times, 7 out of those 8 times, he was profitable. All right.
Nice.
That's a staggering percentage.
Yeah.
He's just doing a low amount of money and a low amount of shares because he just wanted to, practice. And he said, man, my hand is shaking every time I go to click the mouse and make a trade. I'm just shaking. I'm shaking. And I couldn't figure out, like, the more I listened to him, I'm like, you know the system, you believe in the system. The problem isn't the system because you're winning. The problem is right here. You're thinking about the previous system you were using and the money you lost. And now you've got a system that works, and it works like that. And your answer, you're still reacting to, what it was before, what you were doing before. So I use the analogy. Everybody's probably gone through this, where you date somebody, you break up, and the new person you're dating, you're kind of thinking, okay, well, this new person is going to act like the old person.
Yeah.
And when the new person doesn't act like the old person, you're still like, nah, 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 being pump fake. I'm being pump fake, right? But this may just be the person who, is not like that. So this is a system. It's not like that old system. You got to get rid of that, right? So a lot of psychology that goes into this.
Yeah, and that, I mean, what you're saying there is it coincides with what you're saying about when we tell people you can make $300 in 30 seconds. It's not in their DNA because they're thinking I work an hour, I get paid $30 an hour.
Right.
So most of that I know in my business, and I know based on hearing from what you say, is a lot of it is just about getting people to understand the mindset.
Yeah, actually, the first thing that really I have to teach, the name of the company is Flip That Stock. Really, I got to teach people to flip your mind, flip your mindset first, because what you're going to see is abnormal. It's unusual. Like, we don't get taught that in school. If we grew up, when did we grow up getting taught? Go to school, get good grades, and get that good job. And that good job can always be crunched down to you making a certain amount per hour or salary.
Yeah.
Right. You go in the market and anything can happen. Right. I had one member, um, and this was in our investing group, and we have weekly roundtables, right? We call them shoppers roundtables, where we get together and we're throwing stocks on the table and things on the table that we're shopping for. But uh, about 4 or 5 years ago, we're at the table, and he threw this stock on the table, and he said, "I think this thing is going to go up," and he gave us a rationale why. Man, Aziz, the next day, that stock went up almost $70, and he made almost $70,000 in a day.
Yeah.
Now think about this. And now the question is, what did he do to make that money? He bought the shares. He didn't go to work. He didn't have to dig a ditch. He didn't have to drive across the country. Simply because the stock went up in value, he made that money and he sold it. Matter of fact, I asked him, I said, "Well, where were you when you?" He said, "Man, I was walking down the hallway at work, and I just happened to look at my phone, and he saw that the profit column said, 69,000 and some change, and he thought it was a mistake." So, you look at that, your heart starts beating fast. Like, wait a minute. So he said he ran to his office and got on his laptop, and he's like, "Oh my God, okay, what in the world?" And so, he ended up selling
I bet.
and
Yeah.
and got that profit. I said, "Well, how did you feel like after that?" And he was like, "Man, I'm walking down the hall, and like my boss, he better not look at me wrong. He better,
Right.
he better not even think about looking at me wrong." Um, but yeah, so how many people can really uh, digest that? Like, most people are gonna say, "Man, you lying." If I
Yeah.
said, they flipped the stock and made $500 or even $100 just in 20 seconds, are you lying? Right? They don't know. They don't understand. They've never seen it before. And I'd probably be that way too. If I hadn't done it, and I actually flipped the stock when I first started and made $1,000 in 6 minutes by accident. It wasn't by design. That's how I got into flipping and became obsessed. I probably wouldn't believe it either, because I'm like, come on, man, stop! You're just lying. There you go, this brother lying. You know. But you got to get educated. Got to get
Like
educated.
that. And that's what I was gonna say. When I first got, when we talked, I was same thing. I heard stocks were complicated, so on and so forth. That you can't make money, you lose money. All these myths that we're taught, especially in our community, why we shouldn't
Mm.
get the stock market. But I've always had a philosophy, and I transitioned to this to say, Jr. just said he was an expert, that he wouldn't believe it if he wasn't doing it, and I didn't believe it until I did it. So the key here is not if you know it or you don't know it; it's about taking that leap to say, I'm going to try to find out if he's telling the truth, if this is the truth. And then that's what takes you to the next level.
Yeah. And I think part of the challenge nowadays is social media, and everybody's out there advertising something. Like, we got this course, man, you get this course, and I guarantee you're going to make $10,000 over the weekend. And you're going to do this and you're going to do that. And so that really kind of muddies the water for people who are legitimate and honest and really, teaching this the right way and what to expect. So that's going to increase the non-belief level because there's so much, of that out there. And if it sounds too good to be true, it probably is too good to be good to be good, true. And so one of the things I tell people is, look, first of all, trust your gut instinct, not always what you're thinking, but trust your gut instinct. Secondly, explore. You can go to our website, FlipThatStock.com. You can go in there and click on learn more about trading and flipping. And it'll be an 8-minute video that explains the concept of flipping. And then it demonstrates that, right? And so when you're looking to get educated, you want to be with somebody, can they demonstrate? Like Aziz, I know you're in real estate. I'm not a real estate guru, right? I know enough about real estate, how to buy a house and sell a house, but I don't know anywhere. But I bet if I went out with you, you could demonstrate, JR, okay, if you're going to flip a house or if you're going to, invest in a house, these are your steps, boom, 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 right? So the question is, can the person do it? I had a funny situation where a guy was interested in flip that stock, and prominent person. And so he said, well, can we get on we got an introductory call. And then he said, can we get on a private call? And I just want to see more. So I said, cool, no problem. As soon as we get on the call, after he says hi, he says, I got a friend and they don't believe what you're saying.
Mm.
Now, I got a friend. A lot of times it's really me. It's really that person. So I just opened my computer up, went in, did a flip right in front of him. He's like, oh, damn. And so my point is, can the person actually do it? Right? It's one thing to talk it. It's another thing to sell a course on it. But can the person actually do it? Right? And that's what we do. And we demonstrate it. And we have videos of it. I got a gazillion videos I was doing. But that's the key is like, if it's unbelievable, investigate it and look for somebody that can break it down, make it make sense. Do they have can they demonstrate it to you live, or do they have a video of a demonstration? And then you can but we got to keep our minds open. We get back to the main point I was talking about. You got to detach time and money. Time and money. There's some people who go out. I think man, what's the name? One of the former presidents. But former President Barack Obama. A lot of people want him to keynote speak, right? I know he charges probably $100,000 to $250,000 for an hour talk.
Yeah.
Now, who would believe that? Like $250,000? Or look at the athletes who are bouncing a ball up and down the court. And when you calculate how much they make per time they spent on the court, there's some people who are sitting on the bench the whole basketball game and still making millions. They ain't going out there doing nothing.
Sitting, riding the pine.
Riding the pine. So if you really want to get to the next level financially, you have to detach time and money. As long as you say, well, I can make $40 an hour, or if I make 10 trips, driving Uber or whatever, I can make X amount. You're still connected to time. We got to disconnect from that.
Yeah. And that just comes with a limited understanding and limited, could be self-confidence, could be most knowledge. And here's the thing for the audience, especially in our community, we look at the athletes, we look at the rappers, or even the cats on the street, and we look at them making all that money. But, you have to understand the biggest wealth builders in the world are stocks, real estate, and business.
Yep.
Make the most millionaires, but all we look at is those other things, and
Hmm.
that's a transition we need to make in our minds, in our community.
Yeah, everybody's not gonna. I mean, the likelihood of being one of the 400 players in the NBA very slim, or in the NFL, and even the majority of those players, as we know, after they retire, many unfortunately go broke. Um, so if you can't make it to the NBA or NFL or some other pro team, anybody can learn to invest in stocks. Anybody can learn to flip stocks. Anybody can learn to do real estate. It's all about, what you're willing to learn to do. And I think we have a lot of blocks in our mind, you know, that, what are some of the things you hear? Like do you hear negative things about investing in real estate? Like some of the common things that people might say because they just don't know.
They just don't know, like, the whole, when you're a landlord, oh, I don't want to change toilets and, fix doors or whatever. Yeah, I don't either. That's why you hired somebody to do it for you. And then, with I flip and I buy, just like you trade, you invest, I flip and invest, same thing, just invest on our side as a rental property or a building or something like that. But even on the flipping side, oh, well, the contractors, I don't want to deal with them. They're going to rip me off, so on and so forth, which does happen, right? But
Right,
those are the, if you know what you're doing, if you get the knowledge, you get the understanding, you pay a professional to teach you those things before you get into it, then most
right,
times you avoid it.
right. Well, that's the other thing is that we will pay for some stuff, but a lot of times we won't invest in our education, right? And everybody who's highly successful understands and knows that you can pay for that education and cut down that learning curve and the mistakes. And isn't it interesting? As we're talking right now, the Summer Olympics are going on, right?
Yeah.
And every athlete who is over in that Summer Olympics, who are the most well-trained, most well-conditioned people on the planet, every last one of them has a coach who's over there with them.
Yep.
So if you could just go it alone, why you need a coach? Why do they need a coach? They're already the most well-trained, conditioned athletes on the planet. What they need a coach for? But every last one of them has a coach. So now, if you aren't the most well-trained in business or real estate, or the stock market, or biz, those three things, if you're not the most well-trained, the most educated, to have the most, why would you try and go it alone? That doesn't even make any sense, right? Yeah. And this is another thing I hear. I was talking earlier today about the 7 things that I hear most as to why people don't get in the stock market. I did a survey, and one of the top 7 was, I don't want to lose any money. I don't want to lose any money. And so when I do my seminars, I say, with everybody who woke up this morning and just said, today I want to lose some money, please stand up.
Right.
Nobody
Nobody.
stands up. Nobody wants to lose any money, right? So what you do is you take calculated risk and you minimize that risk through education and experience and having a coach and a mentor, walk you through what to do. It's never a guarantee, but it's closer to success than just saying I'll just wing it myself. That's where you start losing. When the same people say I don't want to lose any money, start trying to wing it, right? And that's really where you lose the money. That's the highest risk.
Absolutely, absolutely. Because it's like you said, we can pay a professional and it'll help curve our loss, but we have to understand also we got to get that out of our mindset that successful people fail. It's just a part of the
Yeah.
problem. Stock markets, real estate, things go up, things
Yep.
not control. The market crashed today. You might have had a stock that was involved in that crash.
Yep.
That's part of the game. So if you're going into it with the mindset, oh, I don't want to fail, I don't want to lose money, then you won't win any money. I learned a term a long time ago that says you gotta break a few eggs and make an omelet.
That's right. That's right.
So
And get back up. The people I've learned, the people who are the most successful fail the most, but a lot of times we don't see all those failures. We just see the success that they had, right? Um, And I was watching this. I don't even know how I came across this YouTube video. You start off with one video, next thing you end up watching some other video totally unrelated to what you started with. I saw this video on Sylvester Stallone
Hmm.
and what he went through and how many times he got rejected. And he was living in a van with his dog. And I'm just watching this video like, damn. And he just kept going, kept going, kept going. But most people don't know that story. They just see Rocky and all that, or they see Denzel or Oprah or whoever, and they just assume, well, they just always had success. No, when you pull the curtain back, there's a lot of scars and blood and trauma and tears, and you make it through all that. And if you keep going, you get there.
Yeah.
But
They don't
investing in
want to show us that because it's not sexy. People don't want to see that.
nah,
All that, right?
yeah. I don't want to see that. I want to see I want to see the yacht. I want to see the private jet. I want to see I want to see all that. I don't want to see the blood and gore behind it. But actually, you should want to see it
Absolutely.
because once you see it and you say, "Hey, um, if I got to go through that, at least you know it's coming." Like one of my favorite movies, and probably actually my favorite business movie, right, is The Shawshank Redemption.
Oh, I love it. Yep.
And
Yep.
that's not even a business movie, but it really is a business movie to me because that guy wanted his freedom so bad that for years he took a spoon, scraping the wall in his cell and putting it in his pocket and going out in the yard and letting it fall onto the ground. He did that for years to get a hole big enough to get through. But then it would have been nice if he got the hole and he could just walk on out and he's free. Then he got to crawl through like 100 yards of prison sewage.
Mm,
So when I was seeing that, I was like, man, that's kind of entrepreneurship.
absolutely.
You got to
Yep.
scrape away, scrape away, scrape away, scrape away. You get a breakthrough and you're all excited. You're like, oh, I got my big break. And then it's 100 yards of sewage you got to go through.
Yep.
And you're like, damn. But if you keep going, bam, now at the end of the movie, he's sitting on the beach. And so that's what anything, real estate, stock market, owning a business, uh, you keep going and you keep banging away and getting guidance along the way. And if you want it bad enough, like I said, I can teach anybody to flip stocks if they're willing to invest in themselves and follow the system and practice and keep going. If they're willing to do that, they can be a successful stock flipper.
Absolutely. You showed me. So, and I say the same thing about real estate. A little more capital involved. So, I mean, really, if you're looking for investments, stock market is a lot better place to be in because the capital initial capital that you have to put up is not very much at all compared
Yeah.
to our opening a business, a brick and mortar. So what I want to ask you, JR, is we talked about a lot about showing people so on and so forth. When we bring you on next month, and I know you have tons of videos. Can you walk us
Yeah.
through one of your trades?
Oh, absolutely. Absolutely. What I'll do is, yeah, I'll share my screen next time. I'll bring a video and I'll break down, uh, what's going on so that people can see it. But I want your audience to brace themselves, like I said, because it's going to look unbelievable, and it's going to be a lot of blinking lights, and we'll talk about that, next time I come on and we break it down, and then they can see it. Yeah, and but it's like anything else. If you want to learn it, and here's the crazy part, and you have the advantage of this, Aziz, because you are in the program. It's just it really is not that hard once you just follow the system and you practice and you understand it. Just but it looks complicated. When I show you my screen, it's gonna be like, damn, right? And that's the way I was too. And then I was like, this thing ain't complicated. It ain't no more complicated than the dashboard that's on our car. But y'all will see next time, when I come on.
Yeah. All right. We appreciate you coming on. We're gonna wrap it up there. And like I said, look out for us next month. He's gonna demonstrate to you so you can see firsthand. And then, my suggestion when I saw it, I signed up. It was a no-brainer for me. And I'm sure that'll be for a lot of folks out there that are really interested and want to build wealth and create a better future for their family. As usual, we always appreciate you, JR, coming on,
Mhm.
sharing your knowledge, and again, flip that stock. Flip. Go ahead and drop it for him.
Yes,
Where
just flipthatstock.com. You can just go to flipthatstock.com, and next time I come on too, we'll have a major new announcement as well. So we're gonna have a lot of things to share with your audience. And when you go to flipthatstock.com, and if you look at it'll say if you're interested in, learn to flip stocks or options. And when you click on the link, it'll ask you, how did you find out about it? Definitely, put in Aziz or Ross or the house that Ross built or something, so that we know that you know you're one of his listeners, and because you might just get a nice little surprise. Okay, so if you don't put that in there, but because you're watching, you're one of the loyal viewers, we'll give you a little something. Okay.
Different conversations as it relates to